Hello there, and how are you doing? Now the answer to that question, the answer to how are you doing, may actually depend on whether you had invested heavily in Terra. This is a stable coin that recently collapsed and took with it all the investments of everyone who thought it was a good thing to invest into, despite being something called stable coin. It turned out it wasn't stable at all. I'm going to talk about in this video what is stable coin, how does it differ from other cryptocurrencies, and why is it perhaps something that should be treated very differently to other cryptocurrencies. Now, before I do that, I'm assuming you understand what a cryptocurrency is, something like Bitcoin or Ethereum. Essentially, it's a piece of code on a blockchain, decentralized, not owned by a bank or a country or anybody else. It's a completely democratized form of currency, and the value can go up and down depending on how the market for that cryptocurrency is doing at any time, how much people are buying it, how much they're investing in it, essentially how much people hold. The problem with standard cryptocurrencies such as Bitcoin is it is very volatile. People became crypto millionaires because they got in early. As a general rule, they got in at a particular time, crypto went through the roof. It increased by thousands and thousands and thousands and thousands of dollars of value. It went from being something that was worth very little to worth something that was worth a fortune. And people cashed out, they bought houses, they bought yachts, they became what are essentially crypto million, if not billionaires. Elon Musk dabbled in it and has probably made a bit of money just trying to potentially ruin it by tweeting something about Bitcoin and making the value go up and down so you can buy and sell it off as he goes. It is essentially a little bit of a stock market with no actual stocks, with no actual asset attached to it, because a cryptocurrency is not generally attached to an actual asset in any way. It is its own thing. It has no intrinsic value whatsoever. You cannot take your Bitcoins out and count them. You cannot keep them in a money bin like Uncle Scrooge and swim around in them. They are just a piece of code, but they can be worth a lot of cash, and people have made fortunes and lost fortunes on the back of cryptocurrency. Now, what we've seen, certainly in the last couple of years, and certainly I think as the global markets have come under a lot of pressure, there's a lot of horrible things going on in the world at the moment, is we've seen more and more people investing in cryptocurrency. It seems like everyone these days talks about cryptocurrency. People ask me all the time, oh, how's your crypto doing? And I actually not that very heavily invested in cryptocurrency, I have to bet. I'm a little bit of a cynic, a professional cynic, I suppose, even if my heart's not in it, but there we go. Don't know if you got that reference. But everyone seems to think it's the easy way to invest because you don't have the hurdles and the regulations you get in the stock market. And there is talk about regulation cryptocurrency, and my view is it is the Wild West. Perhaps to a certain extent it should remain the Wild West, but maybe there is some room for some regulation. But I'm really on the fence. I haven't decided, except perhaps in one case. So because I said the word volatility over and over, didn't I? Because Bitcoin, cryptocurrency, Ethereum, because it is very volatile, people lose money all the time, and people don't see it as something they can entirely always rely on in terms of a currency, because it has no intrinsic value, because it's not linked to something that has any value, because you're buying something that literally doesn't exist. It's a completely intangible asset. That was me being a magician. Then it's just worth as much as the people who are buying it or selling it on any particular day. Step in, stablecoin. Stablecoin is a type of cryptocurrency which is supposedly stable. Of course, we all know that no cryptocurrency is stable, but stablecoin at least gives the veneer of stability by saying that it essentially links to something else. It is pegged to something else. It is pegged, in most cases, to the US dollar. So the value of your stablecoin will follow the value of the US dollar. And that sounds pretty cool, right? It's a different way of investing. It's a different way of buying a currency that doesn't really exist, but it's linked to a currency that really does exist, and you can follow the world markets and you know how much your cryptocurrency is worth at any given time. Right? Wrong. There are three types, roughly three types, but three obvious types, and only two that I think are really viable of stablecoin. Now, one is where someone has a cryptocurrency, and the examples of this would be Tether or TrueUSD, where they are pegged to the US dollar or some other thing like the price of gold or some other tangible asset. But the people behind the cryptocurrency are making sure that there is essentially, when you buy that cryptocurrency, some of that goes to buying a reserve of the actual collateral asset that that cryptocurrency is linked to. That stable coin is linked to a real tangible asset, and that tangible asset is being purchased to go in line with the actual stable coin. So for example, Tether keeps a reserve of US dollars, and therefore if it has that reserve, The theory goes that it will always be worth the value that it says it's worth because it's pegged to that US dollar and it has the US dollar to prove it. Now there's lots of questions here. Well, is that going to work if it's maintaining a reserve of fiat or fiat currency or some other collateral? Can it always have enough of that fiat currency to actually make sure that it's actually worth that much? I am a little bit of a cynic, but in theory, perhaps it could. The second form, and the one that I'm not a big fan of, is crypto-collateralized stablecoins. This is where the stablecoin is essentially collateralized with other cryptocurrencies. So I think DAI, I might be wrong on this, I think DAI is backed by Ethereum. They're buying Ethereum to actually prop up their own cryptocurrency. That does sound a little bit like a Ponzi scheme in some ways. Maybe it is. I'm not a big fan because you're still essentially not dealing with any tangible, real link to any physical asset. You're still in a position where you say it's a stable coin, but you're still existing entirely in the crypto world. At least with something like Tether, where it's actually pegged to a US dollar reserve, at least you know actually there is something physical in the background. But there is a third way, and it's a cheaper way to produce a stable coin whilst giving it, again, this veneer of stability, or at least using the name stablecoin. And this is the cryptocurrency such as, I suppose, Terra USD is probably the best example at the moment. I think that's the one I'm going to be talking most about. This is an algorithmic stablecoin. Now, algorithmic means that it uses, I mean, remember this, cryptocurrency, Bitcoin, everyone thinks it's cool, it's the future, it's very complicated technology, it's all fantastic algorithms and computer programs. Therefore, it makes sense that perhaps if you're trying to maintain a peg to an actual currency, if you're trying to maintain a peg to the US dollar, you would use an algorithm to do this. And this is exactly what an algorithm stablecoin does. I'm going to say that too many times, algorithmic stablecoin, doesn't trip off the tongue. So Terra USD essentially takes an algorithm, it takes a complex computer program, and it works out the value of the US dollar, and it uses that algorithm to make sure the value of Terra USD is always linked to the value of the US dollar. So Terra will always be worth whatever the US dollar is worth at any given moment. It will go up and down, but it will go up and down with the US dollar and everything will be fine. It does this by having another cryptocurrency called Terra Luna working in the background, which helps to maintain the peg. And that sounds great because they haven't had to buy loads of US dollars. You're not in a position whereby if you run out of US dollars, the peg collapses. You've just got your algorithm working in the background, hopefully infallible, making sure that essentially whatever your Terra USD is worth, the US dollar is worth about the same. And people invested in it. Terra has done incredibly well. It's made an absolute fortune. People have seen this, I think, as the stable, non-volatile, friendly face of cryptocurrency that they can trust. People have encouraged their friends to get involved in it. People have put their life savings into it in some cases because it was very easy to invest in. You just need an account with any crypto exchange and you could invest in it. And they watched the money not go through the roof, but it was doing very well. At a market capitalization of, I think, something like 45 million or maybe even billion. I'll check that and put it up on screen, US dollars. And then it all went wrong. So some things have happened. Here in Hong Kong, our currency, the Hong Kong dollar, is pegged to the US dollar. And the US dollar is doing very well at the moment. Just basically just due to inflation, actually, due to everything that's going on in the world. That meant that recently the Hong Kong government had to buy more US dollars in order to make sure that they could keep the peg going, to make sure the peg did not collapse. And essentially we're at the very, very top of the peg at the moment. It means that the US dollar value and the Hong Kong dollar value, because of the US dollar value, may be a bit artificially high. But hey, people trade currency here in Hong Kong all the time. They're probably glad of it and they're using Hong Kong dollars to buy British pounds or whatever else. Who knows? I'm not a currency trader. I have no idea. But for Terra, this meant something much worse. The algorithm couldn't maintain the peg. There was no way it could then use Terra Luna to keep the peg going. So things started to happen. The peg started to fall away. When the peg broke, people started to sell their Terra because they knew that they're actually in a position where they were going to lose a load of money. And the value collapsed. At the time of me making this video, I'm pretty sure that the value, and I checked this just before I started recording, but it may have gone up or down as I'm doing this. So when I actually edit it, I'll put the actual value here at the moment. But Terra USD, which should be worth approximately $1 US, at the time of me recording this, is worth 15 cents. So you have 15 cents for every dollar you invested. Terra Luna has so many 0.0000s that I can't tell you what the value is at the moment, but it means people have lost their money. Now you may be thinking, well, it's cryptocurrency, people lose their money all the time, it's just what happens with cryptocurrency. It is a volatile investment. But this, I think, is where the problem is. Stable coins have this veneer of acceptability. They have this feeling that it's not quite investing in cash and tangible assets, but you're actually investing in something that's linked to a tangible asset, therefore it must be a good thing. And I think more people invest in it thinking it was stable, thinking there's less risk than would be associated with any other cryptocurrency. And of course, people lost all their money. You can go on some cryptocurrency trading forums at the moment and they have links to Samaritans because people have lost their life savings and they don't know what to do with themselves. They are absolutely beside themselves in terms of the money they've lost. And I think this is a problem, and it's a massive blow to cryptocurrency as a viable proposition. It pushes you back to fiat currency, it pushes you back to tangible assets. It makes you feel that perhaps the market only works for those who are actually professional investors. If you dabble in it, you will lose all your money, just because someone would lose in short trading or whatever other stock exchange things that aren't recommended for beginners. But the problem is people have lost a lot of money, and it brings back the suggestion that maybe we need some actual regulation. Now, I don't think cryptocurrency itself should be regulated. I like the democratization of it all. I think people should know what they're getting into, and people certainly know, unless they're complete fools, that when they invest in something like Bitcoin and Ethereum, that they may lose all of their money. They can look at the chart, they go, they may lose all their money. But I do fear that people who invested in things such as stablecoin, particularly in Terra, particularly as we've seen in the last few days, not even weeks, but in a few days, they thought they were investing in something that was more stable, less volatile than Bitcoin, and they got burned probably more badly than if they'd actually bought Bitcoin with the money they had. So maybe we do need some regulation. The moment the US is suggesting it, I think it needs to be thought of as something of a security. You are essentially investing in something that's linked to a US dollar. Terra itself, to all extents and purposes, I think is dead. The founder of Terra is saying he's coming back. He's going to bring Terra Luna back. He'll find a way to essentially make it all work again. But the people who've lost their money are not going to get that money back, and they've lost their fortunes. Now, something weird happened. I don't think it was just the strength of the US dollar that did Terra, and I get the feeling there were some professional investors in the background that may have tried to short it or have made a lot of money building it up and then getting out. But that's really not my area to talk about, and I'm no expert in that particular field. But it means that these currencies are open to the same sort of tricks and tomfoolery in trading that the real markets are open to, but there's no regulation to stop it happening. So my view, and it may be controversial, is that we don't need to regulate cryptocurrency, but stable coins, anything that you are selling to the public, you're essentially selling a product to the public, that needs to be regulated. Think of investment products. Investment products that are available to the general public are heavily regulated in most markets, and that is to protect the individual who may not be an expert investor, who may not know what they're getting into. If you're calling something a stable coin, if you're giving it this veneer of authenticity, and I think that will probably need to be regulated too. That is, of course, if stablecoins even survive, given what's happened to them in the recent times. But anyway, hopefully that wasn't too technical. If you've got any questions, do let me know. Either message me on LinkedIn, put a response in the comments. I would like to see what actually happens with stablecoins. It's interesting because we see now the digital renminbi, the digital yuan, I suppose you want to say, China's own digital currency, which isn't a cryptocurrency, it is a currency that's just run by a government, but it's backed by a government. That's gaining some traction in China, and obviously there's a push to get digital renminbi all around the world, but would you really want China ruling your currency all around the world? You probably wouldn't, given some of the things that have been going on in China recently. But it'd be interesting to see if people then move away from stablecoins and think that a state-backed cryptocurrency is the answer. I don't. I just think we need some proper regulation, or rather we need more people to understand what a stablecoin is and how cryptocurrency works, and hopefully I can help with that. I'll be back soon with more stuff, most likely on the metaverse, because I'm doing a lot of talks in person, which is kind of cool, on the metaverse at the moment. But in the meantime, go and check your cryptocurrency account. If you invest in Terra, you have my condolences. Maybe you want to invest in something else that's more viable, such as NFTs. Maybe not. But I hope you have a good one, and I'll be back very soon. Take care.